Rates are high now. What if I refi? How much does it cost? When is it going to happen? When are rates going to get lower? We're going to talk about all of those topics and a lot more next. Hey there, this is Ryan Skaggs, and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates, beginning to mid-July, and want to kind of dive into a topic today that is a lot of higher interest rates than what we saw just 6 months ago, right? So I've been getting this question over and over is, what's it going to take if we refi, say, in 12 months or a year, right? So this conversation's been over and over and over again. And one of the first things is to understand where the average 30-year fixed is today. So to do that, you can check out the link below to Freddie Mac. It's freddieMac.com/PMMS. While you're down there, hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. But when you find that link, you're going to see the interest rates have moved down a week over week. Since then, we've actually had a couple really bad days in the market, so we lost some of those gains. But with that said, average 30-year fixed, 5.30, paying some points. And again, you can check out that link below to see more. Now, I'm going to give you an example and take you onto the screen here. And what I'm showing you is, what if I locked in the first column a 6% mortgage on a 30-year fixed, right? Let's say I did that a year ago, or let's say I do that today, and then in 1 year's time, what would it look like? In column 2, I'm showing you what if interest rates go down to 5, or basically go down 1% from where they're at now. In column 3, I'm showing you what if interest rates go down 2%. Now remember, I told you the average 30-year fixed was 5.30 paying points. So I am showing you a non-point option where you're not paying points across the board. I've done videos before. Actually, I'll link to one here where I talked about, have interest rates peaked? And that's why this video is so well timed, because likely we have seen a recent peak in rates. We're going to time will tell as if we've seen the absolute peak, but from where we're at right now, we're starting to stabilize a bit till more data comes out later this month and to see how we're handling inflation. But to answer that question again, what if I refinance? So typical costs, at least in Illinois, and you're going to want to contact a lender to better understand what your scenario might be, what they charge. But typically under $2,500 would be a good kind of back of the napkin math. What could it potentially charge before any kind of credits, or if there's no appraisal needed, then obviously you don't have to pay for that. There's different things that are refinanced that you might not have with a purchase. So if you've got a cost baked in, now again, I'm showing you this second column. What if the house is worth more? Because that's significant. If you put a lower down payment and now you've got more equity built in, you're getting a lot closer to potentially avoiding mortgage insurance or that reducing. So what I'm showing you here is that 1% difference in this case with an appreciating market, almost $300 of savings. And then look at that right column. If rates go a full 2%, I'm using the exact same property taxes, exact same insurance, for each of these scenarios. So this really is an apples to apples scenario in terms of what does the original payment look like that likely you felt comfortable with, and what's the payment today, and then almost $500 of savings. So take you back off the screen here, and just to kind of better understand it, to summarize, yes, you can refinance after you do a purchase. Yes, you can do that, right? So there's typically no prepayment penalties to your average loan. Those are pretty much gone these days. But again, you want to make sure and ask your lender in terms of the product and program that you've selected and that you guys will be potentially closing on, right? You want to better understand that. Then with that, understand the costs. Understand what that cost might be. Again, as I said, here in Illinois, typically under $2,500. So understand what your savings would be, and what your threshold. If you save $100 and the cost is $2,500, then that's a break-even point of 25 months. So that's really what I want you to think about, is that you can marry the house, but you can date the rate, right? So again, this is Ryan Skaggs with the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. And we will see each other very, very soon.